About the auto space, CEAT also posted their numbers yesterday. Very weak set of numbers in Q3. The margins came in single digits for the first time in at least 8 quarters. Anant Goenka, the MD of CEAT, joins us now. Anant, good morning. The biggest damage to your earnings has come in margins this time. The lowest margins we've seen in at least 8 quarters. Should we expect more pressure?
EBITDA margins were at about 11%. I would say that there are two impacts that have happened. One is that commodity prices are beginning to come up. So that's having some impact. Natural rubber is continuously seeing a large increase, particularly during the course of last quarter, which will start hitting us in Q4 as well as Q1. And the second was the impact of demonetization that happened in December, latter half of November, and continuing a little bit to January. So two negative impacts have had an impact a little bit on growth as well as on margins.
That point is taken, Anant, but even the top line growth has been kind of subpar, growing in single digits this quarter. You spoke about demonetization impact. Do you see demonetization impact in this quarter as well?
So our top line has shown growth of about 4 to 5% on average over the course of this year. On volume terms, we've actually grown by about between 10 and 15% range, depending on which quarter you talk about. So net overall volume and number growth has been quite okay, but because of overall price reductions that have happened over the last year and a half, value growth is showing a little lower. From December, January kind of time period, the impact of demonetization has been slightly higher on the two-wheeler segment, where we are slightly more focused on, and therefore we are seeing a slightly sharper drop in with respect to drop in growth. While we were showing 20-25% growth in these categories, that has come down quite substantially. I do see some pickup happening as we speak around early February or so kind of time. I do hope this translates into higher growth, but I'd say January also may have been in some way a little subdued.
Okay. Anant, good morning. Have you taken any price action, or do you plan to take any price increase in next quarter?
No, we've not taken any price action on Q3. I would say it's in this quarter that we are looking at increasing some prices because of the raw material price increase. Rubber, for example, which was at about 110, 115 rupees per kg, has gone up to 160 rupees per kg approximately. Similarly, crude oil and related products have gone up. Therefore, it's more a time where we will be looking at more and more price increases over the course of the next 3 to 4 months.
So finally, Anant, what's the outlook for next year? I mean, you've spent all of FY17 in low single-digit growth and a hit in margins. Should we expect the same in FY18?
I think next year on a growth perspective, we should be a little bit better or nearly as good as this year in terms of volume terms. In value terms, it will be better because you're looking at an environment where price increases may happen. So net, I think growth in value terms should be quite a bit better next year. Margin pressure is expected to be there because we saw a very sharp increase in raw material prices. It depends really on our capability to transfer the price increases that have happened, as well as the competitive environment. So that's difficult to say, but I certainly think that initially in the early part of next year, there will be more margin pressure than what we are seeing now.
Okay, that's a very candid observation. Thank you very much, Anant, for joining us with those details on your company. Let's